ICT silver bullet modified. People like us dumped ICT's silver bullet strategy because of its low win rate and how we get stopped out so many times. But this mastering video, that is ICT silver bullet remastering, that's what the video is all about. We reach you added confluences added to this silver bullet that makes it more logical and fantastic. It increases its win rate as well, and I think it's better version of silver bullet. That's what you're about to learn. So if you want to know everything concerning that, don't rush anything. Calmly watch this video to the end. No rush in the process of learning unless you want to give out your money. So the rules and what you're about to learn today concerning ICT silver bullet remastering. The first thing is I will teach you how to determine your bias. Bias is very important. It plays a very vital role in this silver bullet remastering. That is your intraday bias. It's very important. So we need to learn how to determine our intraday bias so we know the direction of the market, where the market is heading to in New York session. So before we start, let's give quick recap on old silver bullet strategy, how it works. And we all know that this is where we trade silver bullet old ways when we see markets moves high and low, and we are heading to 3 o'clock a.m. that is London session silver bullet time, 3 o'clock a.m. to 4 o'clock a.m. New York time. So here is 3 o'clock a.m. and here is 4 o'clock a.m. Once we are in 3 o'clock a.m. we have entered silver bullet. What are we looking for? We move down to 1 minute time frame and look for fair value gap. Any fair value gap we find during this time, during this period, we enter our trade. That's how we trade old silver bullet. This sounds good and simple, but I told you earlier on that I get stopped out so many times with this very well trading silver bullet. But since I discovered this ICT silver bullet remastering, that is a modification made on it, everything changed. So for that reason, we need to know our bias. Now let's know how to determine our bias. That is the first thing we need to learn before moving to entry model and the other confluences added to it. So stay tuned. Now, how do we determine our intraday bias? This is 15 minutes time frame. So our higher time frame in the silver bullet is 15 minutes time frame. We're making use of two time frames, 15 minutes time frame and 1 minute time frame. 15 minutes time frame is where we determine our intraday bias. Now we all know, if you have been following me, you have seen me countless times talking about how market moves. So market moves from external range liquidity to internal range liquidity. This is external, any high and low is external range liquidity, and any fair value gap is our internal range liquidity. Now markets have moved back into the external range liquidity. Maybe there is a fair value gap here that market is seeking to fill. Start filling in this fair value gap. We are anticipating that market is likely to batch off this external range liquidity. Once we see this on 15 minutes time frame, market badge out this external range liquidity, we have determined our bias, because we know that next thing market needs to do is to fill in a fair value gap sitting in this zone, but we don't pick random fair value gaps. Is that clear? At this point, we invite our Fibonacci extension tools. You understand? So Fibonacci extension tools, we're inviting you to tell us where is our discount on this movement. So once you place that where markets sweep liquidity on their internal range liquidity to the external range, any fair value gap within this zone, within this discount, is where we mark out as our fair value gap. So once we mark here as our fair value gap, here becomes our draw on liquidity. Then we'll be waiting patiently for 3 o'clock. Once it's 3 o'clock, so let's say for instance we are in 3 o'clock at this point to 4 o'clock a.m. Once we determine our bias, we know the direction of the market, we then move to 1 minute time frame. What are we looking for in 1 minute time frame? We're looking for market reversal, that is change of character in 1 minute time frame. You understand? So now once it's 3 o'clock a.m., we mark out our time, then we're looking for market structure shifts in 1 minute time frame. So we need to see markets makes highs, maybe another high and low. So if we'll be tracking this patiently once we are still on timing. So if, let's say for instance, this is the recent high on the 1 minute time frame, then if markets change character at this point, here is our change of character. That's the market structure shift. On this market structure shift, if there is a fair value gap, remember this is 1 minute time frame. If there's a fair value gap on this zone, that's where we place our pending order as our sell stop, buy stop. Place our pending order here. Then our target should be 1:2 or the draw on liquidity that is in 15 minutes time frame fair value gap. That is our draw on liquidity. So now we're waiting for the market to move back into this 1 minute fair value gap. If market moves into that fair value gap, tap into the zone, then we target 1:2 risk to reward. So this is what we'll be looking for. I hope this is super simple and clear. Do you understand? So another thing that you may add to this silver blades remastering to make it super clear is SMTP divergence. So SMTP divergence is correlation of pairs. Do you understand? When two pairs, forex or indices, there are two pairs that is a move in same direction, that have their similarity are obvious, that that the same way this pair move is the same way this pair move. For instance, if you are trading EURUSD, you look for your SMTP divergence in GBP USD, and if you are trading NAS 100, you look for your SMTP divergence in US 30 and the S&P 500. Then what of AUD USD, you look for your SMTP divergence in NZD USD. So what about gold? I think gold is NZD JPY. So that's for gold. So all these pairs have the same movement, but once, let's say for instance that Euro GDP moves high, makes higher highs and higher low, but in GBP USD it fails to make higher low and makes lower high. For instance, here is a divergence. We have divergence here and we have divergence here. So once you have this is manipulation. You don't need to worry anymore. You have confidence in this very setup you have in this time period. So same thing happens in New York silver blades. The only difference is time. You look for this very setup in 10 o'clock a.m. to 11 o'clock a.m. Then reverse be the case. If you reverse this chart is something. So let's say for instance, we determine our intraday bias, market buys out this external range liquidity when maybe downtrend. The only thing we need to look for is time. Wait for time. Once it's 3 o'clock a.m., we move to 1 minute time frame. Look for reversal indication. Remember where we mark out our fair value gap on discount, that is our draw on liquidity. So this is what we'll be working with, and this is how I trade ICT silver blade currently. So I'll give a couple of examples, not that much, just 2 examples, then we end this video. Just make sure you master everything in this diagram. That's why I spend my time trying to make everything super simple in this very diagram, so that when I give example, if I don't give much, you can be able to identify those things in your chart without help of anyone. So let's move into that. So guys, here is example. Let's look into EURUSD. First thing we need to do is to determine our bias. So our bias, we're looking for price when it buys external range liquidity. So we have one here. Price have taken this external range liquidity. The next thing we are anticipating is that markets will go back into this internal range liquidity, which is fair value gap. On that fair value gap, we don't just pick a random fair value gap. Anyone we see there, we use FIB tools to give us insight where is our discount for more risk to the world. Now we have marked out we have know where our discount is. Let's mark out our fair value gap. Our fair value gap starts from here to here, and if you look closely, the fair value gap is huge. Then we use the middle of the fair value gap. You understand? Now we divide this fair value gap for more risk to reward. But if the fair value gap is tiny, we don't need to divide. We pick the one that is on discount. Now there is the middle of the fair value gap. Then we mark it out. Here is where we'll be targeting. You can see that's the middle of the FVG we have on our discount. Next thing we need to do is to mark out our window period, our silver bullet time, which is from 3 o'clock a.m. to 4 o'clock a.m. Here is our 3 o'clock a.m. This is our 3 o'clock a.m. and this is our 4 o'clock a.m. This one is our 4 o'clock a.m. Then we wait patiently for price to reach this time. Then we move to 1 minute time frame. After determining our bias, we are moving to 1 minute time frame. So we need to remove this flip tools. Beautiful. We are now in 3 o'clock a.m. silver bullet time. So everything now is volatile. What are we looking for? We're looking for market structure shift and fair value gap for our entry. But if you notice here, we have market structure shift before the silver bullet time. You understand? So here is market structure shift we have. But we will not be in this trade because we are out of the timing of silver bullet. So once you have this, once you face this on your charts anytime, you only look for recent fair value gap within this time. But looking closely, we have almost hit our draw on liquidity. But it doesn't end there. We can still find a fair value gap for our entry. So let me see if we have any fair value gap. Beautiful. As this candle closes now, it's a very nice fair value gap, but still have enough volume to trade because we haven't hit the middle of our fair value gap, which we mark. You see this red line there. Now here is our fair value gap, and this fair value gap is huge as well. We use the middle of this fair value gap for our entry. So here is the middle of this fair value gap. Mark it out for our entry. So set our buy limit inside the zone. There's our buy limit long. Then we target 1:2 risk to reward. Do you understand? Keep on moving till you have your 1:2 risk to reward. So let's see what the future brings. Beautiful. See, market moves away, tap into this fair value gap. Let's see if the trade we're still on timing. There's no panic. If you hit your stop loss, so be it. So that's how we trade. So your trade is on. So if you want, as the market have created this volume, you can still target this high because of this a very clean zone. You can still target. So let's see if that gives you 4 risk to reward. What a massive win. See, beautiful. That's how to do it. So giving much example, simple for people, they won't work for it. I think I'll end it here, but for benefit of doubt, let me still give you one quick example before I close this video. Just make sure you follow all the guide, the principle listed this very remastering of ICT silver bullet. So let's see you in next example. So guys, here's the last example, and this is New York silver bullet. Now we'll see markets buys out liquidity. Markets takes out this external range liquidity and it's pull back to this zone. What are we anticipating? Let's mark our time. This is 10 o'clock to 11 o'clock, and that's when we're seeking for our entry. You can see this is 10 o'clock and to 11 o'clock a.m. That's our New York silver bullet time. What are we looking for? We move to 1 minute time frame to do what? To find our entry. Remember, we have determined our bias and we are seeking for external range liquidity because market has taken in the internal range liquidity. You understand? So now where is our fair value gap? Our fair value gap, I have a fair value gap here. This is a fair value gap. Let's mark it out. This is fair value gap. We're not going to use, so inviting our flip tools from here to here, you can see that's exactly where we have our discount. That very place we mark as our tiny fair value gap. So what next? You move to 1 minute time frame for entry. So we're almost time. Beautiful. See what happened? Once it's 10 o'clock a.m. is a very nice push that gives us market structure shift. On this market structure shift, it gives us enough volume and give us nice fair value gap as well for our entry. We look for another candle close. Let's take out this line for you guys to see clear. So next candle, beautiful. We have very nice fair value gap. We mark this fair value gap in 1 minute time frame. We're almost there, but we seek the internal external range liquidity. Here becomes our, this is long setup pending order inside this very half of this FVG. So let's see what happened. Here becomes our stop loss and we target 1:2. Okay, so 1:2 risk to reward. So if your 1:2 is not yet out, you can decrease your stop loss to fit this your fair value gap. We're in very high volatile zone, so you don't need to fear anything. You understand? So I decreased to have 2.37 risk to reward. Let me see how it plays out. Let me see. Beautiful. Can see the trade is won. Even if you like to target more, this here is recent. All these are liquidity, recent lower high, recent lower high. So anybody that wish to target all these liquidity zones, you can, but always target your 1:2 risk to reward. That's how to do it. That is the only way you can trade silver bullets to make money this 2024. I hope you guys enjoyed this video. Don't forget to subscribe, leave a like, share with your friends, and remember, this channel is to help young traders from self-destruction. We don't charge for anything. Everything is free. The only thing we need from you is your like and share and comment. We like to read your comments. See you guys in the next video. Bye for now.